Right now, there's a market signal happening that has literally never occurred before in recorded financial history. For 200 years, when economies get weak, long-term interest rates fall. I mean, it's basic economics. But today, every major developed country is seeing the exact opposite happen simultaneously. And what's terrifying is that most people have no idea this is even occurring or what this means. And this isn't just some academic curiosity. This signal has historically preceded massive wealth transfers.
마크모스는 미국의 금융 전문가이자 경제순환, 금융 역사, 중앙은행 정책, 비트코인과 암호화폐를 중심으로 일반 대중이 복잡한 경제 흐름을 쉽게 이해할 수 있도록 설명하는 크리에이터입니다. 그는 주로 비트코인과 탈중 앙화의 미래, 미국 및 글로벌 금융시장 분석, 연준의 금리 정책 등에 대한 주제를 다루고 비트코인을 단순한 투자 수단을 넘어 금융 시스템의 대안으로 보고 있습니다. 이런 그가 현재 세계 경제시장의 침체를 얘기하며 이는 곧 결국 통화 시스템의 문제 그리고 전통적인 통화 자산에서 비트코인 같은 실물 자산으로의 대규모 이동이 시작되었다고 말합니다.
Alright, jumping right in, let me show you something that should be impossible. Now, right now, as I'm recording this, the US 30-year Treasury yield is sitting at over 5%. Now, that may not sound like much to you, but here's the thing. This is the third time we've seen yields this high since October of 2023. And of course, just a few days ago on May 21st, we actually broke above 5.09%. But here's where this gets interesting. These bond yields are spiking during one of the weakest economic periods we've seen in years. The U.S. economy actually contracted in the first quarter of 2025. We're talking a negative 0.3% GDP growth, and that's the first contraction we've had since early 2022 during the pandemic supply chain mess. Now, here's the data that should make your head spin. Now, the last time the 30-year Treasury yields were consistently above 5% was back in 2007. And of course, that was during a completely different world. We're talking about an economic boom. We're talking about GDP was growing. Demographics were strong. We had a private sector debt-fueled expansion happening. But today, Goldman Sachs just downgraded the U.S. growth forecast from 2.2% down to 1.7%. The Conference Board is warning that tariffs could substantially lower GDP growth and weaken the labor market. We had Mark Zandi from Moody's Analytics said, and I quote, "Everything is lining up for a much weaker, perhaps recessionary economy dead ahead." So we've got 2007 level bond yields happening during the 2025 level economic weakness. But here's what's really shocking. This isn't just happening in America. Every major developed economy is experiencing this simultaneously. Let me show you the data here. Germany's 30-year bonds are sitting at 3.10% right now. And that's the highest we've seen them since the global financial crisis. But here's the kicker. The German economy is barely growing. They just slashed their 2025 growth forecast down to 0.3%. And of course, Goldman Sachs is saying their real GDP hasn't changed since the fourth quarter of 2019. The UK, just as bad. Their 30-year gilts hit 5.46%. That's the highest level since May 1998. But the UK economy has been struggling with what they're calling faltering growth and weakened business sentiment. Japan, they're even more interesting. Their 30-year yields are screaming higher. They just hit 3.07%. That's a 25-year high, with some maturities reaching all-time records. And get this, Japan's own prime minister just told parliament that their fiscal situation is worse than Greece was during the European debt crisis. It keeps going. Australia's 30-year bonds are at 5.16%, also making new highs. So we've got Germany, the UK, Japan, Australia, all of them seeing bond yields spike to levels we haven't seen in decades. Okay, but here's what makes this incredible. All of these countries are dealing with weak economic conditions, stagnant growth, or outright economic struggles. The last time we saw bond yields at these levels across the developed world was during economic booms, not during what the German Industry Association calls stagnation, and what experts are worried could turn into a recession. So the question is, if this isn't about economics, then what's it really about? Okay, so to understand why this is so alarming, we need to go back in time. Now, the last time we saw 30-year Treasury yields consistently above 5% was back in 2007. And of course, like I said, that was a completely different economic environment. We're talking about back then the height of the housing boom. We're talking home mortgage debt being exploding from 46% of GDP into the 1990s up to 73% by 2008, reaching over $10.5 trillion. Back then, unemployment was low. In 2007, it was sitting around 4.7%. We had full employment, strong consumer spending, businesses were investing heavily. But what happened? When the financial crisis hit in 2008, those same 30-year yields crashed down to 2.53% as investors ran to safety and the economy collapsed. And that makes sense, right? I mean, when the economy weakens, that lowers bond yield. Like during COVID, the 30-year yields hit an all-time low of 1.79% when the economy was literally shut down. I mean, the pattern has always been the same. Economic strength pushes yields higher. Economic weakness pushes them lower. But there's a smoking gun here. Something that proves this isn't about economics anymore. This is the key thing. We've seen the markets and the economy diverge. And it comes from an asset that's been screaming this warning since early 2024. Now, this chart tells us the exact moment everything changed. Gold surged more than 40% since the start of January 2024, repeatedly shattering records according to Goldman Sachs. But here's what's interesting. This wasn't a gradual rise. This was a breakout. Something shifted in early 2024. The approval of Bitcoin ETFs in January was also just the surface of this. What we're really seeing was the beginning of a massive move out of traditional monetary assets and into hard assets. And here's the key point. Gold doesn't typically perform this well when the economy is supposedly doing okay. Gold surges when people lose confidence in the long-term value of money itself. Now, since the beginning of 2025 alone, gold's gained another 28%. That's not normal market behavior. That's monetary distress. And if you think gold's move was dramatic, wait until you see Bitcoin. Even Bitcoin, despite its volatility, is telling the same story. After the Bitcoin ETF approvals in January 2024, we saw massive institutional inflows, $1.9 billion in early January alone, creating what analysts called a supply-demand imbalance. We saw Bitcoin climb from $40,000 to over $70,000 by March. But here's what's really telling. This isn't just retail FOMO. MicroStrategy has increased their Bitcoin holdings to over 450,000 Bitcoin during that time, valued at over $45 billion. Now they're holding over 550,000 Bitcoin. U.S. entities now hold 65% of global Bitcoin reserves. I mean, these are what we call the smart money. These are sophisticated institutions making strategic decisions about monetary assets. In January 2025, Bitcoin hit a new all-time high of 109,000 just hours before Trump's inauguration. And of course, the timing isn't coincidental. Both gold and Bitcoin are responding to the same underlying monetary concerns. So we've got two completely different assets. Traditional store of value gold, we have digital asset Bitcoin, and they're both screaming the same warning signal, at least since 2024. They're telling us this shift from economic fundamentals to monetary concerns is real. So if this isn't about economics, what's it really about? This is about the long-term value of money itself. Let me show you the numbers that bond markets are pricing in right now. Okay, we have Trump's new big, beautiful bill. It's projected to add nearly $4 trillion to the deficit over the next decade. Now, that's according to the Congressional Budget Office. So we're not talking about small numbers here. We have bond markets essentially pricing in a world where governments can't or won't balance their budgets, which means that there's only one way out of this, and that's a currency devaluation. Basically making their money worth less to pay off debts with cheaper dollars, with cheaper euros, yens, or pounds, or whatever. But here's the thing. Now, the 30-year Treasury has been pushing higher for weeks as budget negotiations intensified, and of course, investors started pricing this into the fiscal reality. As one portfolio manager put it, longer term, it blows out the deficit. Yields are going higher because treasuries are becoming incrementally less appealing and less trustworthy. It's about a fundamental shift in how investors view the long-term purchasing power of government currencies. So the question is, what should you do with this information now? Smart money is already positioning for this reality. I mean, look at the numbers. Gold delivered a 33% gain in 2024, strongest performance since the 1970s. And this year, gold's up another 27%, hitting record high after record high. The S&P 500 has also been strong. It's gained over 23% in 2024, following a 24% gain in 2023. Of course, from all that money printing. But bonds, they're getting crushed. Now we're seeing a massive treasury sell-off that's prompting investors to completely reassess their fixed income allocations. The beginning of a monetary crisis. The signal isn't just present, it's accelerating. This is the shift that we're seeing right now, or that we're living through. And as long as we position ourselves correctly, then we can protect ourselves. We can make a lot of money along the way. Let me give you the bigger picture strategy, and it's somewhat simple. You just need to position yourself in hard assets. Hard assets, gold, Bitcoin, real estate, things they can't artificially create more of, some quality stocks. Look, things change. This is about understanding the new monetary reality. When governments are on a path of currency devaluation, you want to own things that maintain their value in real terms, not promises to pay you back in, of course, a devalued currency. These monetary shifts happen slowly, but then all at once.
마크모스는 현재 글로벌 시장은 경기 침체에도 불구하고 장기 금리가 치솟는 전례 없는 시장 구조를 마주하고 있다고 말합니다. 이는 단순한 사이클이 아니라 화폐 시스템 붕괴의 시작이라고 얘기하며 결국 시장에서 반응하는 자산은 금과 비트코인, 즉 스마트 머니로 거대한 자산 이동이 시작됐다고 얘기합니다. 특히 비트코인은 글로벌 기관 자금이 집중적으로 유입되고 있는 디지털 자산이며 가치 절하를 할 수 없는 유일한 자산이라고 전망하고 있습니다. 우리는 객관적인 시각으로 투자를 해야 하고 지금 당장만 보고 투자할 게 아니라 미래를 보고 투자를 해야겠죠. 010-2472-0429 전화번호로 탈겜이 적어서 문자 보내주시면 2025년 비트코인과 코인 시장에 대한 분석, 정보들 공유해드리겠습니다. 현재 우리에게 중요한 것은 이러한 정보를 어떻게 활용할 것인가입니다. 지금까지 영상 시청해주셔서 감사하고요. 다음에 더 좋은 영상으로 찾아뵙겠습니다. 감사합니다.